Today in the crypto space, we see the market kind of going sideways. Bitcoin right around that $64,800 mark, not moving much, and Ethereum the same, right around $3,500, give or take. The rest of the crypto space, the altcoins, a mix of green and red. We do have a few gainers like Tau and a few dips across the market like Sheep. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about one project that has come down significantly, however, is looking good, and some signs of support are evident, and that project is called Shido. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. Whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 7:30 Eastern, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here with the market. First, we'll scrape through the top 100. We'll look at the overall market cap. As you can see, it's a bit hesitant, kind of going sideways right around that $2.5 trillion, while the volume in the market does come down, which means that, it could be, obviously a divergent type of scenario where we do see the market cap eventually take a bit of a dip. The trading volume kind of dies down. The market's not interested. Risk takers are not looking because ultimately, we did get a nice little bounce and we are back into structure. And on the short term, we could get a dip. And this is hypothesis. This is a thesis that, could definitely be argued that on the 4-hour, maybe even the 1 hour, on the lower term timeframes, we are basically looking for a bit of a retracement that could allow the bulls such as us to be deploying capital once again. So this is something that we have to consider. In addition to that, we also have to consider that it could be just a continuation, right? We come down, take a breather for a couple of days, make a bull flag, and then continue to the upside without any retracement. And guess what, guys? It happens. This is why DCAing is so important. So in the next couple of days, if we do not come down, you know what, I would consider DCAing a little bit, because we don't know if we're going to be coming down for any retracement, and in fact get that bull flag to see Bitcoin, Ethereum, and all the large caps continue to the upside, and then of course see that redistribution or that distribution of capital or even gains from those large caps into mid caps, small caps, and down to the micro cap level where we start to see the altcoin season. So this is what we got to consider. Now there are a couple of scenarios here in this market. We have projects that are going sideways in bearish conditions that show a lot of strength. We also have projects that have been coming down significantly for various reasons, either obviously being overvalued or even a few exploits here and there across the market. We know that we're in the wild west of crypto, and we know that we're in speculative technology. We know that the software engineers out there are trying to build innovative software solutions, but along the way there are going to be growing pains. And this is why today I did feel like it was necessary to look at a project that's going through that as we speak and trying to recuperate from the mishap. And of course that project is Shido. Like, guys, Shido at the end of the day still lingering around, right? They're strong. They got a great tech. They got lots of great fundamentals. And of course, guys, if you want me to do an update on Shido, I mean a deep dive update, because after the exploit and after the mishap, of course, there's things that have been changed. I think they do have mainnet already going, and I would like to get you guys updated with what is happening with the Shido project. So if you want me to do a deep dive update, which I have yet to do, guys, I do deep dives every Sunday. Join the Discord, and on the Discord I have a section where I have deep dive suggestions. And if you make any requests for any projects, it doesn't have to be Shido, it could be any project. If you want me to do a deep dive, feel free to join the Discord, put your request right here in the deep dive suggestion section, and I'll definitely put it in on the list and we can vote for it. Because a lot of projects that I've covered about a year ago, let's say, have been updating, have been going through things, have been introducing more features into their ecosystem, and they deserve a bit of attention. So feel free to join and make that request. All right, let's scrape through this top 100 very quickly. I do anticipate there's not much happening here. We do see a lot of the price action dipping down just a little bit. Of course, top gainers tend to retrace a little bit more because of the volume gaps that are left behind. We do see Altcoin coming down. We do see even Shido coming down for a dip. Even AVAX, a little bit of a retracement here. And as I scroll through the market, you can kind of see the hang time. The hang time is getting real here. So as we see the volume coming down, we could see the market take a bit of a dip. And again, back to that 4-hour thesis, where we could be scaling in on the 4-hour, that might be our opportunity, guys, to see some fire sales in the short term. In the meantime, we do have a few little gainers here. We have Mantle doing good, MNT going for that higher high, up 4%, going against the grain. You know, guys, I really don't like going against the grain because generally the market in general wins after a while. Yes, we went up for a higher high here, but if the market comes down, trust me, the majority of these markets will come down, including Mantle, even though right now it's on a higher high. It's bullish. I like it. I appreciate it. But I wouldn't be buying into a pump in a neutral or negative scenario, right? Because eventually neutrals could come down negative. Dog with hat right now is the man of the match. It looks super good. It's up 13% for the day. Nice breakout to the upside. If you're a holder, congrats. Good move there. And we have BitTensor. Guys, if you missed out on my video on BitTensor Tau a couple of days ago, guys, right now BitTensor has been doing well. Slow grind to the upside, of course, but it's better slow and steady than quick, because then what happens is you leave those volume gaps below, and we can see that dip come down faster than you think, right? So that's something you got to consider. And we do have some good gainers like BitGet tokens waking up 3%, and we have Lido DAO up 4%. And you can see Thorchain Rune, guys. Thorchain is doing great, guys. I'm happy about Thorchain, given the fact that I've been scaling in upon the retracement. The Thorchain Rune retracement was really, really clean. It was easy because it respected the TA. And I did release a video earlier on showing you the setup. Guys, hopefully you took full advantage of it, because right now it's up 7.7% in the day and 25% in the last 7 days. The reality is I think it's just getting started, because really it just did. Today was one of the major days of any green price action for Thorchain after the retracement. So guys, pay attention, because as soon as a project kind of goes flatlined at the bottom of a range, that is when you should be taking risk, especially once structure is formed, so that you can put a stop loss right underneath. And that's what we look for, guys. We look for structure. We look for great risk to reward ratios. We look for oversold conditions with signs of divergences, so that we can get in at the appropriate moment without taking too much risk. We have Jupe doing pretty good, up 6%. We have Core still doing good. And a lot of the market is still doing fine, either neutral or still kind of grinding to the upside. But then we do have a few little dips along the way. Gala. We have a Flare. We have a few others. We have Akash Network, and either, you know what I mean? So it looks like the market right now is a bit confused. WorldChain, of course, ran up significantly in the last little while, and all of a sudden now it's down 7%. No big deal, guys. No big deal, because it's been up significantly, almost 50%, right? So a bit of a retracement is no big deal ultimately on a top gainer, right? So we have to understand the market works in peaks and valleys, and that's what we should be expecting. Profit taking, buying dips, profit taking, buying dips. All right, guys, let's get right into it, guys. I know you're here to talk about charts, so let's begin. Let's take a look at Bitcoin, and obviously we'll take a look at Shido today. I want to focus a bit on Shido. I want to look at this chart right here, the Bitcoin chart, because really the chart is starting to show me that really we could just be going sideways for the next little bit, and maybe not even get that 4-hour dip that I've been talking about, because we're forming a bit of a structure here on the short-term time frame. Let's look at this in a little bit more detail. And you guys know I'm big on structure. I'm big on risk to reward, because really after years of trading and paying tons of tuition fees earlier on in my trading career, I came to the conclusion that the only way of success in a trader is to understand your losses. Your gains are easier to deal with, right? Really, there's two decisions that to be made, buying and selling. When do you buy? When do you sell? However, the buy-in is where you take a lot of the risk, because you're actually putting up your initial capital, your hard-earned capital, into a market where the market could be taking that capital away from you. And your primary objective is to protect that initial investment, to protect that capital. Now, all of a sudden, we see Bitcoin, got a nice rally back into structure, back into the bull flag. Ideally, we do come down and back test so that we can get a spring off of the previous support zone that we've used before, and consider this a swing failure pattern and get back to the top of the range. But as we consolidate right here above the previous high, it could give us a scenario that we could definitely make a nice bull flag right here, right? A nice bull flag right into here would be totally fine, and then get a continuation to the upside, not even giving us an opportunity to buy the dip. So what we should be doing is obviously get into lower time frames and start looking at exactly the structure that is being built. If we don't get bearish, we got some bearish divergence already on the oscillators. You can see higher highs on the price action, lower highs on the momentum, and the trend oscillator, momentum oscillator showing all of that, all the bearish divergence. However, guys, you can see the volatility might be looking for an overbought state. And if that were to be the case, where we see the orange line get overbought again, we can go for that higher high, which is fine. We get another drive of class A bearish divergence, and then eventually we roll over. That's all very possible. But what about if we don't roll over? What about if we do not make this dip and back test the breakout zone and confirm horizontal supports, and we just go sideways into a structure? And I'm going to get rid of this artwork here for a second and show you what I mean. What about if all we do is get into some sort of triangular formation, some flag, or some sort of consolidation, and then look for a continuation to the upside? Guys, that would also be very, very healthy. Just think about it. A nice accumulation range, offloading a bit of bears or profit takers and onboarding some bulls, and then looking for another expansion to the upside and waiting for the volatility to also get back to the upside and to get the momentum, give it one more drive to the upside. Even if it maintains a class A bearish divergence right into here, no big deal. Ultimately, what matters is we made a higher high on the price action and we went for an expansion. However, guys, as we fulfill this bearish divergence, I'm still keeping in mind that it is possible to come down and backtest. And if that happens, I'm going to have capital reserve to buy the dips. And it could happen any day now. I would say, within the 24, 48 hour zone, we could be seeing that retracement, and we might be leading into the weekend. And in the weekend, when we do get that volatility, just understand the order books are thin, and it might be the greatest opportunity to be buying the dips on those red days over the weekend. Okay, so let's just keep it in mind. We'll stay one step ahead. We'll take it day by day. I don't rush. You guys know how patient I am. But ultimately, the first DCA was down here. That was great. Now I'm waiting for another one. If we do get the dip, another DCA. If we go sideways with great structure, another DCA. I don't mind if I'm DCAing on higher highs, because if you look at it big picture, we're looking for some moves to the upside within a structure that is so bullish, this bull flag on Bitcoin, that eventually could break the ranges of 70,000, 72,000 and start going for a higher high. So reality is, it's not about catching the bottom. And I know sometimes you don't get the best entries that you've wished to get, but the market doesn't have to promise you anything. It's about an average. It's all about statistics. And as long as you have an edge, as long as you know where you can validate your thesis, you're doing fine. All right, guys, so let's jump right into the charts. Let's take a look at Shido for today. Shido is one of those projects, guys. In fact, it's one of those projects that need a bit of attention. It's not only Shido. There's quite a few projects. Every bull run, every market, every cycle, there's always a project that gets hit, and it gets hit pretty hard. I can name a few already in this rally up that we've been, some projects have been taking a bit of a hit. This is the reality of this space. When you're in a speculative technology or a speculative environment, there's a lot of growing pains, which means that some projects, they maybe they fail, maybe there's issues, and then they pick themselves up, they patch it all up, they go back to the drawing board, the engineers put in some overtime, and then all of a sudden they become stronger, they become better, and the technology is a little bit more trustworthy because really everything is, revised a second time. And that's the reality. We've seen major projects of the past. If you think about it, Ethereum even had an exploit back in its day, and this is why we got, Ethereum Classic lingering around. So we got to understand that Shido, at the end of the day, did take a bit of a hit. Okay, and the reality is that even myself as an individual in this space, needs an update once in a while, and I feel like I'm due for an update. I would like to know exactly how the team and how the project kind of, patched itself up, basically got back on the treadmill and continues, basically going forward, because that's an important factor, right? Not even flinching the way they did. They kept on going at it, and they were attending trade shows and all of that. They were all over the crypto space, even though they did get exploited, which showed me a sign of resilience. Now, all of a sudden, I feel I need to get reinformed, and I would like to inform the community. So as I mentioned earlier on in this video, if you are interested in a deep dive update, because I've already done a deep dive, I feel like it needs an update because it's been a while back, and it doesn't include the exploit and so on and so forth. So I would like to kind of see exactly what's going on, and I feel like I'm missing I'm missing out on the tech. I think there's a DEX already. I feel like there's the mainnet is already launched because they were about to get launched, and I hear some buzz about mainnet. So I would like to know a little bit more. But ultimately, what's more interesting to me, obviously all those fundamentals are great, because to be fundamentally bullish means that you'll have the convictions to buy on massive dips. Unfortunately, earlier on when I was looking at the TA, I saw this head and shoulders, and it was a diagonal head and shoulders. And if you've been following me here on the channel, you guys know I don't like diagonal invalidations. Diagonal invalidations are the worst, right? Because you don't know which bottom to deal with, which bottom is going to hold support. But it did see it, right? We did see a confirmation high, a lower high. And then I'm hypothetically saying, if you take a measured move, we do come down to these lower levels. And guys, look, we came down to that level. Now, ideally, it would have happened based on the invisible hand of the economy, of the economics, to see it come down. Supply and demand pushes it down, but guess what? It didn't happen because of that. It got exploited. And the reality is, it could have been that it wouldn't have fell down. It could have gone into a bit of a retracement and took a dip, because you got to also understand, while Shido was coming down, the rest of the crypto space was also coming down. It wasn't just Shido. So we got to understand that as well. The overall market conditions were bearish during all this time. So Shido was just, basically taking a double hit. All of a sudden, we see Shido going sideways, potentially making a very strong, floor price here, back at previous accumulation ranges. All these people accumulated right into here, including myself, rallied right back up. And then, this was profit taking zones, right? All of this, when you got the structure that suggested a bit of a bearishness, and then all of a sudden exploit time. And then we see all of this, mess down all the way down to lower levels. Now that we're going sideways here, we're basically bringing back a bit of confidence into the market. Is it time to redeploy? Is it time to say, Shido is still good from a fundamental perspective. The tech is still good. The team is still cranking, doing what they got to be doing. The community's strong, guys. I can reassure you, the community's growing, and it is very, very strong. And then we start to look at price. Is it undervalued? Basically, is the price below what the actual value is of the project itself? Meaning its value proposition. What kind of a value proposition does it bring to the market as a software solution? And this is where I feel like I need the update, because obviously the project gets updated every so often, obviously with all the updates, and I would like to know exactly what is happening there. But in addition to that, look at the price action, guys. It looks like we're getting a nice double bottom, and more so, we might look at this as an Adam and Eve pattern. It's starting to look like a nice Adam and Eve pattern. This could be more of a V recovery, but it's pretty V-ish, let's say, hypothetical V-ish. And then all of a sudden now we're coming down to back test that bounce, and it looks very rounded all of a sudden, which is a lot healthier. Whenever I see rounded bottoms, guys, it's very, very healthy, because it shows signs of slow and steady accumulation rather than quick buy up. A quick buy up is healthy, but it also shows you that a lot of these buy ups could be based on algorithmic buy orders on exchanges that get triggered all at once, and then you get that quick reaction to the upside. Whereas this is not so much. This is people slow and steadily accumulating over time, because really they want to build a position for a longer hold. And that's the psychology that I see when I look at the charts. And over time, as when you look at the charts, you start to become a lot more confident with the rounded bottom. So I kind of like what's happening here. And if we were to define this as a double bottom, a W formation, or even an Adam and Eve, like I'm suggesting, it doesn't really matter. What matters is where's the breakout zone and where's the accumulation zone. Let's zoom in a little bit more. And I want to show you that we do have a bit of a volume gap right here, which is a weak spot, which is healthy, because if we break above above its current price, which is at about 0.001. Guys, it looks like we're going to have no problem at all, basically climbing to slightly higher levels. However, the most important level to consider here for Shido at the current moment is this level right here, which is the previous high. Why is that important? Because once we make a move above that high, we start to get a higher high, and that changes the character of the structure. So we start moving here, and then we might get a rejection on the 200 exponential moving average. That's totally fine. Maybe we come down, maybe we go sideways, maybe we come down, who knows? Let's take it day by day. But really, I would appreciate some sort of structure, whether it be inverse head and shoulders, whatever happens here. I want some sort of consolidation so that we can see maybe another continuation. That's what I want. But ultimately, let's take it day by day, step by step. Right into here is where I'm expecting something to happen. Okay, a breakout, again, a consolidation for a pullback, whatever the case is. But ultimately, this is where the magic happens. Why? Is it because this is where you get the change of character. If we come down for a higher low and after making a higher high, all of a sudden we're going from lower lows, okay, right, lower lows, and then a double bottom, and then we're going to higher highs and higher lows. So this would be considered a pivot point. This whole area would be considered a nice rounded pivot point where literally we can kind of say, you know what, maybe we're coming down, maybe we're basically looking for that, pivot. That's all it is. A reversal, a nice reversal after maybe some divergence. Let's take a look at some of these oscillators to see if we are getting divergence. If we look into the momentum, let's collapse this for a second and just make this a bit bigger and stretch this out. And ideally I can get rid of some of this artwork because it's hard to see exactly what I'm talking about with all these lines going on. Let's get rid of some of it. All right, that's that. And this is just a disaster, but all good, all good. All right, so let's kind of make this a bit smaller so we can see. You can see Adam and Eve, very nice, okay, or double bottom, whatever you want to call it. And ultimately, you can see the momentum at this level. We got this low, and we got this low right into here, slightly oversold, fine. And then this is higher than this this low, sorry. So we got this low and this low. Now compare it to this low and this low. This is a double bottom. This is a higher low on the momentum. Higher low on the momentum means that essentially we're making a class B bullish divergence. Now, if you look at the waves, the expansion waves, look at this bottom, and then look at this bottom, and then look at that bottom. And basically, class A bullish divergence, class B bullish divergence. It's a strong divergence. It's not the strongest. Class A is usually the strongest. But guys, what's very strong is that we're at critical levels. This is the horizontal level at previous lows, pretty much. We're very close. Your invalidation is this thick yellow line. And in fact, risk to reward ratio is at its best. If you're going to take risk, when are you going to take it? When it gets into the abyss down here? Like this is critical now. This is where you're buying basically the bottoms of bottoms. Lower than this, things get really hectic here for Shido. Of course, it could always come down and sweep the lows, and we always have a bearish scenario. Comes down, sweeps the lows, and maybe comes down for an extension down to the 1.27, 1.618, who knows where, and then all of a sudden back into structure and maybe continue to the upside. But as of now, you know what? We got a double bottom. We got a touch. So it could be good. I know maybe the bears might say, you know what? We're going to get a dead cat bounce and come back down and maybe break below. Maybe on the 4 hour, we do come back down and test the horizontal once again. But the reality is that we're so close, price is so close to this bottom that your invalidation is very real. And we're getting class B bullish divergence at this horizontal. So it's a good sign that the bears are showing weakness. It's a good sign that the bears may not have the strength to actually make that lower low and break below the horizontal. So it may be a good time, statistically speaking, to take a bit of risk. All trades have a bit of risk, right? No trade is risk-free until you're in profits and you take your initial investment off the table. All right, let's move on. Let's take a look at what's going on here with this oscillator, which is the trend oscillator. The trend is looking great. We can see that EMAs are facing up. The EMAs are looking really, really good. We got the histogram bars moving to the upside, nice and green, and we got a purple expansion finally coming out of the woodworks in the background there, showing us that, you know what, we might be getting into a bullish trend to the upside. And this is the daily, guys. Keep in mind, this is the daily. We got multiple drives of bullish divergence all into this as the expansion to the downside gets smaller and smaller, and the price is coming down. It shows us that potentially the trend is looking for a reversal reversal right into here. So I kind of like that as well. So Shido at the moment is in a level of which we are getting structure where we can clearly put our stop loss right underneath the thick line. If we do come down and take a dip, you have decisions. Do you stop yourself out? Do you hold on for a little bit to see if we get back into structure? But as the momentum, everything is showing us to the upside with regards to trend and momentum, guys, it shows us that this is not a bad time to take risk. It definitely isn't. So DCA nice and slow, and you should be fine. Now, if we get into a setup scenario, let me see if I can get you a nice little setup so that I can show you exactly what I mean with regards to risk to reward ratio for those of you that are new to crypto and want to get an idea of how to enter trades without taking too much risk. Your invalidation and your entry need to be close by. That's the bottom line. So let's say entry is right here, right? And then you got to ask yourself, where am I done with this bullish thesis? At what point do I say I'm done? I'm done. Now, if we break below here, guys, not a good look. I'll be honest, no matter how bullish I am on Shido, honesty is key for me. And if we do break below, we're going to give it a bit of wiggle room, right? We do break below. It's okay to wait for a structure down here and then get in again once again, because we don't know how low we're going to go if we come down for another dip. However, guys, based on the double bottom, we can start putting a bit of confidence in the confluence of the chart that we're looking for a bottom here, looking for a reversal. And with that said, we need to start looking for take profit zones. Now, this is a risky spot that we identified, right? The previous high. Maybe we consolidate right around here. Maybe we back test. Maybe we get into a bull flag right into this level and call it a cup and handle or whatever it is, because this could be a nice rounded bottom with a consolidation that would be considered a cup and handle. Now, if we start zooming in and we look at the risk to reward ratio, it's not good. Right? It's only 1.3 to 1, basically almost like a 50-50 shot. Not crazy about it. Now, we could tighten up the stop loss and put it up a little higher, right? Not so much wiggle room, which I don't appreciate. I like a little bit of wiggle room. So that's that. And we could say, you know what, maybe I'm going to buy a little bit here where we are right now and wait for a 4-hour dip. Back to that thesis of the 4-hour on daily. If we do come down on the 4-hour a little bit, you might be able to improve your entry, quickly bringing it to about 3-to-1 ratio, which would improve your risk to reward ratio significantly. This is a healthy trade. And guess what? Look at your target. It's up 96%. Which means that ultimately you could take half on the double if you wanted to. Take your initial investment off the table and make it a risk-free trade. But what's even better is if you start zooming out, guys. So let's leave our entry right here where we are. And let's look at what we could be doing once we break this previous high and go for a higher high. We did talk about maybe getting a bit of a rejection of the 200 daily, because the 200 daily right now is definitely pushing to the downside. And we want to see the 200 daily eventually reverse and get back up to the upside and go like this, right? It could be that we tag it right around this level, which would make our risk to reward ratio better, obviously, because we're now moving up and it's 2-to-1, and right, you're up 88%. But if we start zooming out and we really look at what Shido's doing here, is basically trying to pick up enough bullish bids to see if we can get back to previous highs. And the reality is, it's because of the exploit that we're down at this level, because of the FUD that we are at this level. And who's to say we can at least get back to previous price action right around here, which is at about 0.0078 more or less. And that would give us a huge opportunity, and I would call this a punt, a huge opportunity to get straight back to that zone, bringing us back to about 600% plus gains, obviously. And for me, that would be a scenario of which I would want to be prepared for. I would want to accumulate a bit of capital at the bottom of the range just in case that were to happen. Not just keep on taking profits, but always reserve a bit, because right now this is very, very undervalued and at a price where, guess what, guys, if we do get back to that price action, you'd be up significantly. So a small bag can go a long way here, guys, and accumulating a little bit based on the risk to reward ratio is absolutely healthy. So just keep in mind, obviously, you're taking risk. All entries on any trade takes risk. However, right now the risk to reward ratio is very, very healthy. All right, guys, if I've offered you any value in this video, do the channel a massive favor, slap the like button. It does really help out with the algorithm. Guys, are going to be live tonight at 7:30 Eastern, where we talk about crypto news and price action. Feel free to join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. Take care, guys. Have a good one. And don't forget, buy the dip.